Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Rajesh, Bhatia, Group President, Finance and Accounts and CFO at UFlex joining in. Welcome to the show, Mr. Bhatia, and always a pleasure to have you and speak to you. My first question coming to you is earlier when we spoke, it was peak COVID times. How do you see business transitioning from March to now with the impact of COVID and how things have changed?
So, Hiral, March to now, we've seen phases like, phase from April to, you can say, mid July end or mid August, where, everybody was wanting more of packaging because, as the lockdowns happened, we all wanted to accumulate, store whatever best we could at our homes. And that meant that, the shelves at the stores were empty, which had to be refilled. So there was a lot of demand for the packaging. The raw material pricing was down because the crude consumption, the petro product consumption came down as there was no movement. So the crude prices triggered a downfall in our raw material prices as well. Demand side, it was pretty strong, so the margins were pretty strong. As you see, all the packaging companies have reported a 25 to 35 percent range of margins during this EBITDA margins during this period, depending on their product profile. So it was all sort of very good. And in August, September, October, when the normalcy started to return, the lockdowns began to lift it. So while people had done a lot of ordering earlier, so these periods actually became a bit lull because the festive demand was also subdued, and we had the inventory clearance at the end of the manufacturers, at the end of the retailers and all that. So the demand was relatively subdued during this period. And then we had this huge increase in the raw material prices, polymer prices, which is on account of some of the capacities going for repairs. Then we had a US storm, which led to the largest MEG player shutting its plant. And today we find that the raw material supply chain is anything but haywire, which has led to a sharp increase in the raw material prices. Yes, there has been a commensurate increase in the finished goods prices as well for us, because today there is a clear shortage of polypropylene, which is the main raw material for BOPP. So, very interesting times in the last 1 year. We've seen from a scarcity of, the finished products to scarcity of raw materials to a bit of a lull. So interesting and, very, very, I would say, times where, you can't plan things in a very normal manner. So you have to react very fast to particular situations and what to do. So, in most of our businesses now, we have shifted. We can't offer a long-term index-based pricing because today the pricing of the raw material has been, de-linked from the indices. So while the crude is generally stable between 65 to 68, the raw material prices, the margins, the spreads have actually got affected. And so, as we are also finding it difficult to commit for the long term prices. So we are also now moving on to a shorter tenor pricing, maybe a week or 10 days. That's the best we do.
Right. So overall, if you go to see, taking your comments into consideration, especially with regards to where raw material prices go, now that crude has started to inch up, we've already probably cross $70 a barrel in one way. How do you see the future margins being impacted?
Uh, I think, as I said, that today we are dealing to crude. The raw material prices, the way they have behaved is, I think, largely because of the scarcity. I don't know whether it is temporary or it's permanent. Hope it is temporary, and next 3 months the situation improves. Yes, there have been, shutdowns in some of the large refineries in the world, which were probably which all probably got bunched together. There were storms which led to capacity closures and all that. So as I say that, today there is no semblance to the raw material prices, semblance to the crude prices. They are totally today a demand supply equilibrium, which is not existing anymore, and that's what is sort of impacting the raw material prices. Crude prices between 60 to 70, we are able to take it on our stride and plan the things accordingly. But the spreads being so widespread now, that's not happened now in many years for the industry. So this is probably after many long years, probably the industry is witnessing that. So then let's see as to, so all that we could do is that we could also restrict our, see, earlier we used to take pride in saying that we have a 2 months order book position. That does not exist anymore. We want to have as short a order book position as we can, maybe for a week or so, because both the issues. One is we don't know as to what will be the next week's prices, and secondly, we also do not know whether we'll get the raw material or not, even at a price which we may be willing to pay. So you know, and I can see that because we are in packaging films as well as in the converting business as well. So there are pressures on margins on the converters also, because they are also, their prices are also normally linked to the crude prices. But today, crude is not the right benchmark for the polymers prices. That's
Right. With this, Mr. Bhatia, now if you have to break up business in terms of domestic as well as international, where have you seen a better recovery? Number one, post COVID. And secondly, where do you think, as a company, you would want to channelize your energies, taking the next 2 to 3 years into perspective? Because COVID is here to stay at least for the next 12 to 18 months. We don't know what's going to happen, how it's going to pan out.
so. I think in terms of our strategy, Hiral, it's very clear that overseas we will grow only in the packaging film business, and domestic we want to concentrate on packaging per se, whether it is flexible or aseptic packaging. So here we are talking of more of a value addition, and overseas we are talking about only the packaging films. Uh, However, in India, we still have a position where, we are finding that the raw material margins are today more than the packaging margins. So while the raw material suppliers are making any margins between EBITDA margins between 25 to 35%, the packaging is making, EBITDA margins of only about 8 to 10%. So average, you can say 9 to 10% kind of a range. That's not only for us, that's all for the industry players. Uh, Typically, globally, I see that the margins in the packaging hover from about 16 to 18%, which means that India still remains a very fragmented packaging play. Uh, Take few more years for this position to consolidate, but still, I think the margins are pretty much skewed, and so as I said, the overseas it is the packaging films, and India it is packaging. But when you have to allocate capital, you have to decide that at that point in time which is the business which is growing and which is uh, where the margins are higher. So keeping that in mind, we have announced a capacity expansion in southern India, in Karnataka. We're going to set up a BOPET plant as well as a CPP plant. Investment is about 800 to 850 crores, because that's the business today, which is giving you handsome margins. We're not saying that 25% kind of a margins are sustainable, but yes, even at 18 to 20% margins, that still is better than the packaging play. So whenever there is a you know consolidation which happens in the packaging industry, or the excess supplies capacities get absorbed, I think that's the time we will look at the packaging business expansion.
Right. So currently, what's the capacity utilization that we are working with?
So if you say films, so I'll say almost 100% at all. The new plants that we set up, whether in Russia or Poland or Hungary, they also come at a time where the demand side is pretty strong. So I think we should be able to ramp up our capacity utilization pretty fast in some of those facilities. Packaging, yes, we are at about 70% capacity utilization, 70 to 75% capacity utilization levels. And aseptic packaging in this season, we are at about 90% plus capacity utilization levels. So except the packaging, flexible packaging, all other business segments are continuing to as a very robust capacity utilization levels.
Right. And overall, if you go to see from here on now, we already spoke about where international and domestic business goes. Now, overall, the expansion that we're looking at will be to cater the domestic business or the international business?
No, so India expansion, what we are doing in South is to cater to only the India business. So not looking at exporting those packaging films from India, because then we are competing against ourselves in some of those countries.
Correct.
So just to give you a perspective, we were probably the only company who thought beyond the convention and set up the businesses in those countries which are considered to be high cost jurisdictions. There were others who set up the businesses here, who set up the plants here in a low cost jurisdiction, and exporting to Europe or America, which are where the demand is. But we set up factories close to the customer. Even though our cost of operations is much higher over there, but then we were able to give to the customer two major advantages. One is their supply chain, is their working capital, and the supply chain is pretty much more efficient because they don't have to order 3 months in advance from India, and finally when they get the goods for use in their America plant, it takes about 3 months from ordering to receiving. And which also means that they are subjected to undue price variation risk, whether based on crude or based on the other demand supply equilibriums. So if somebody orders, American plant orders something which takes 3 months lead time for them to receive, by the time they receive, if the crude is low, so they will suffer an inventory loss, and vice versa. If the crude is higher, they'll gain. But those fluctuations are never good in a business. So we've been able to convince our customers that you don't need to keep the raw material for 3 months, 5 months, because if somebody is ordering from overseas, he will have a 3 month plus another 2 months he will keep the stock so that he doesn't get stock out. In our Europe plant, where we have customers to whom we send the trucks on a daily basis, so which means that they don't have to keep any stocks. So that's the advantage. So we have proved that being closer to the customer, even though the cost may be a bit high, also works. And predominantly because of that, now there are other people who emulated us later. But still, there are people who are producing in a low-cost jurisdiction like India and exporting from here. Whatever expansion we're doing in India, that's not going to be export market in a big way. That's meant for the domestic market.
Right. And with this, where would UFlex's market share stand in the domestic and the international market?
So domestic, we are very small. We may be under in the packaging films business, we'll be less than double digit. In the packaging business, we should be about 23-24%. Globally, as a consolidated BOPET player, we are number two currently with the current round of expansion having got completed, and BOPP, that is BOPET. BOPP, we are again marginal player because we two plants outside India. So we'll be trying to sort of keep a balanced portfolio, and that's where we've set up plants in BOPP plant in Hungary now as well. Egypt we already had.
Right. And with this, Mr. Bhatia, one thing that we've always seen is that a lot of product innovations, launches that come from UFlex, the kind of integrations that we see on the backward end as well, that's something which makes you very holistic as a company. Now, overall from here on, which segments of business do you think will be growth drivers where we could see a lot of product launches and developments happening?
See, product launches and development, while what we've been doing and we've been, sort of showcasing to our customer what kind of capabilities we have in terms of these developments. But what I have personally seen is, yes, we spend a lot of time, money, and effort in giving them new solutions, but a new solution becomes a normal solutions in a years or 2 years time frame as others copy it. And frankly, in our industry, if you run after patenting this and all that, so it takes much more time. So you normally won't do it unless this is something which is of a very strategic importance, like your recycling or biodegradability kind of a stuff and all that. What I'm trying to say is that yes, we do a lot of research, lot of development, new product development. But frankly, given the margins in the packaging industry, I think they are probably not getting that much of attraction what we would have hardly loved them to have it. So packaging, I don't see that any of the expansion happening in the immediate future. It will take some time, but definitely we would grow this time in the packaging films. We will grow in the aseptic packaging, and packaging has to wait for the better days to come as the margins improve. However, we will continue our endeavor to sort of come out with new product solutions, especially on the biodegradable packaging films as well as the biodegradable packaging, which is going to become the norm of the day once we are through this pandemic and the government efforts are back to ensuring that there is some way to have an end of life for the plastics. And the day that happens, then whatever noise we are talking about the plastics being bad for the environment and all that will just go away. Everybody else, God has decided as to how the life has to end for the packaging products or the packaging films for the end of life solutions. I think UFlex will be the god for the industry.
Absolutely. And then with this, with regards to the chemical business as well, UFlex has secured a India patent for new process to derive epoxy ester resin. If you could just give us more details and what is this product actually all about?
I think I wouldn't lay a great emphasis on this one because I think frankly, if you ask me, yes, we've got this patent and all that, but I think it will take a while for this business, particularly this product, to grow. I think typically we keep on doing some of these innovations and all that, but at this point in time, I think we don't have much to say about this because it is still a work in progress. Yes, we've got this patented, but as to how the market develops, as to what benefits we could take out of it, still we still debating around it.
Right. But what would the application of this actually be?
So this is epoxy resin. Before this patent, this was being produced in two-stage process. The first stage is condensation, which generates a lot of salt that is removed through the several water washings, resulting in high effluent generation. And typically, wastewater was containing 50 to 95 ppm TDS and 50 to 60,000 ppm COD, which requires large capital investment for wastewater treatment plants. With this, and then in the second stage of resin, epoxy resin is converted into epoxy ester resin with a process which results in formulation of undesirable epoxy ester resin, which has dark in color and odor. Now, this new invention arrests the challenges posed in the conventional method, as the epoxy ether now produced has no wastewater generation. So, you don't have to set up any investments in the wastewater management, what was coming out after this treatment. So, the capital investment is not there, and the product has no environment, hazards. So all that is a plus in this. And I think it was a good innovation in the sense that it was eliminating the use of a setting up of a water treatment plant for the epoxy. I think let's see as to how do we ramp it up and all that.
Correct. Right. And overall, very lastly, Mr. Bhatia, if you have to look at FY21, we've almost pretty ending the year now. Do you think we will be able to match FY20 in any way, or what's your outlook looking like to end the year and for FY22, taking the current situations into consideration?
So FY21 is definitely going to be better than FY20. I think not only better, but substantially better, both in terms of the volumes, the production, the sales volume, the margins, as well as on a net profits basis. 9-month results are already with us, and we've seen that both in India as well as in the overseas markets, we have substantial increase in our volumes as well as in our in the profitability. So Q4 also of this year, will not be any exception. I can say that this product, the raw material deficit, will only going to ramp up the margins going forward if this position is the raw material shortages are sorted out shortly. Because at the end of the day, if there are no supplies available for the raw materials, the supply side will get corrected, resulting in the increase in prices way beyond the increase in the raw material prices. So,
right. And is this kind of growth sustainable?
Next 2 years, definitely, because as we set up capacities this year in Russia, in Poland, in Nigeria, in Hungary, I think these plants will take a couple of years for them to ramp up the capacity utilization. So I think on a volume basis, we expect at least 20 to 25% growth in the next couple of years. And once these plants the new facilities are close to about 80% capacity utilization levels and all that, I think that's the time we will plan something new. By the time, if the packaging business is doing well, so the capital will be allocated towards that. But yes, we have no plans to set up any packaging capacities in the global markets. We will continue to do this activity from India, try to maximize exports from India rather than set up these plants elsewhere because of strategic reasons. But aseptic packaging has a huge potential, and we will certainly be, after the current round of expansion in India for the aseptic packaging, at some stage, we will also consider setting up international manufacturing facilities in this segment.
Right, absolutely. Thank you, Mr. Bhatia, so much for getting us this kind of information and the entire story so far. It was a pleasure speaking to you. I hope you enjoyed the conversation as always as well. And stay safe and speak to you soon again, and good luck.
Thank you, Hiral. Thank you. Pleasure always speaking to you.